Hey everyone, this is Nick Garcia with Mortgages by Linda, and we are starting a new segment. It's going to be called Mortgage Market Movers Weekly. All right, so I'm going to take you every week, and we're going to look at what's going on in the overall market and how it's impacting your ability to get a loan with Mortgages by Linda. Today is January 19th. You'll be seeing this January 20th. We have some pretty big news coming up this week. So let's dive into some of the big factors, and then we'll hone in on the housing sector. So let's go.
Everyone, so we are over at the chart, so we're going to take a look and see what the data is telling us about the mortgage interest rates. So I will try to keep this short and sweet, but no promises. So right now we have two lines on this graph. We have a blue and a burgundy. All right, so this blue line is the US 10-year yield. This is a really important line for mortgage interest rates. So essentially, the US 10-year yield is a really good proxy for what the average mortgage interest rate for a 30-year fixed loan will be, right? It doesn't tell us what the rate is, so right here, oh, that's not right. Anyway, okay. It doesn't tell us what the interest rate will be, right? So if it doesn't say this right here, and ignore that over there, but let's say this was like 4%. That doesn't mean that the average rate is 4%. What it does tell us, are rates ticking up or are they ticking down? Okay. This burgundy line, this is the bond market. Okay. So there is an inverse relationship with bonds and bond interest rates, as you can see. And this makes sense, right? So as people are buying into government bonds less, the interest rate needs to go up to incentivize people into buying these government bonds. So this chart's from October 2024 over to January 2025. And they were rising. We saw a dip December 6, 2024, and then a big climb up January 14, 2025. If you've been trying to buy a house lately, you might have noticed the increase in rates. So, but luckily, this came down. Bonds, the demand for bonds came up. The interest rates came down. Now, what had happened was the Federal Reserve talked about cutting rates in 2025, and it's expected the Fed to cut rates about 2 times, right? Not interest rates, but not mortgage interest rates, but interest rates overall, right? So if you want to take out money from your bank, they were thinking of cutting rates. Now, they're kind of battling with unemployment right now. And the weird thing is, when unemployment is really low, then the Fed has no reason to cut interest rates. So it's kind of been this back and forth because we don't want inflation to get too high. The Fed has a target of 2%. And if inflation creeps up too high, there might be a rate hike. If there's a rate hike, then the bond market will start to drop down, okay? During these rate hikes, people want to have cash. They want to be able to spend money on things that are less risky. Not that bonds are risky, but these different assets, stock market, bonds, gold, whatever. As the market starts to drop down, these asset classes become highly correlated, right? So basically what this is saying is uncertainty around inflation, really bad for the bond market. Things that are bad for the bond market, really bad for interest rates, in the sense that the interest rates are going to creep up. Right now, it looks like inflation did not get higher than expected, and that's why we see this jump in the bond market right here, right? And that's why interest rates came down right here, okay? So we have a big week this week, so let's pop on over. Okay, so we're gonna look at this economic calendar. So Monday, which you guys will be watching this Monday, I recorded this on Sunday, is the inauguration of Trump. We have a lot of uncertainty around that. Regardless of how you feel politically, Trump will probably make a huge splash. So we have tariffs, we have deportation, and we have regulations surrounding businesses, lower regulations to be specific. We don't know how these will be implemented, and we don't know how quickly. So that's causing a lot of uncertainty in the market right now. So really, we just have to wait and see how that plays out. So let's take a look at some other numbers right here. So this is the average 30-year fixed mortgage rate. Okay, so we can pull it back. This is zoomed in to 2022 to 2025. And the average as of January 16th, 2025, 7.04. Let's take a look back and just to contextualize things, right? Let's look. So this was in the 80s, 18.28, 18.53, 1981. Not great. Now, 2021, should you have bought a house, considering the interest rates? Maybe. I mean, 2.77 in August of 2021. Pretty solid rate, right? A lot of people were saying the market's gonna crash. It didn't, at least not yet. So you missed out on that rate. Will we come back down to the 2s and the 3s? Maybe. Nothing is impossible in the market, but it's not looking that way. Now, on the bright side, you can always refinance, right? So let's say you get the average of about 7% for your interest rate, and you're like, oh no, it's so high. You can come back later and refinance and get a nice 5% rate. If it jumps up to 10%, hopefully not, but let's just say it jumped up to 10%. At least you don't have that 10% rate, right? So I wouldn't say it's a bad time, even though rates are higher than what we want, right? Everyone wants 3%. You can always refinance. It's not terrible to have that interest rate, and you're not locked into it, at least for a 30-year fixed, right? Let's look at some other data. This is the National Home Price Index. So looking at nationally what home prices look like. Now, just something to look at with this, prices tend to keep rising, right? So we see in 2006, real big, and then what happened? The housing crisis, right? 2008. So recovering from that. But, I mean, housing prices keep going up. And they tend to do that. That doesn't mean they have to, but they tend to do that, as we can see with this chart. So buying a house right now, if you bought one, you can always refinance for a lower rate later, but you won't be able to go back and get it for a cheaper purchase price. So that's something to take into consideration. Let's look at 2024. Zoom in a little bit. So they really jumped up, right? From June to January of 2024. Okay, starting to drop off a little bit, right? Not terrible. Let's go to the median sales price of houses sold in the US. Now this is 2022 to 2024. So it looks like the median sales price has been coming down. Not great news if you're a seller, but probably better news if you're a buyer. It's still, it's up there. The median in Q3 of 2024, $4,400. Pricey. Now, this is the median sales price for all of the United States, right? So, you're going to have more expensive places like New York and California impacting that. But this just goes to show, too, let's zoom out. Like I said, when we look at the average home price, they tend to rise over time, okay? So would it be a terrible idea to buy a house right now? No, I don't think so. Like I said, you can always refinance later. That's just my opinion. Buy or don't. Of course, I would prefer for you to buy, but everyone's got to do what's right for them. Well, that's kind of it right now, and if you want a little recap, a little conclusion of everything I just said, can interest rates go down? Certainly. And if we go back to this chart, bond market looks like it is picking up some steam. Really, if we can get past these earlier numbers around here, it looks like the bond market can tick up, which would make interest rates come down. So we need to see what's going on with these policies with new administration coming into the White House and how that's going to impact inflation. That's really the biggest thing right now, inflation. The Fed would like to get it to 2%. Year over year, it's 2.9%. So it's coming up higher, but it's not higher than expected. So definitely possible for interest rates to come down. But, anything's possible in the market. So just because it's possible for them to come down, don't bank on that. Like I said, it really depends on the policies implemented with the new administration. Well, this video is getting pretty long, so I am going to cut it here. Let me know what you thought. Let me know if you want more explanation of things. Did I go over something too quickly? Did I not go over it enough? Am I just flat out wrong about something? Definitely let me know. I can definitely improve with my knowledge of this, and hopefully we all can improve and better ourselves every day. So have a great week. Stay warm. It's pretty cold out there. Looks like there is some kind of freeze warning in Florida, which is pretty crazy. So, all right. Well, see you guys next week. Bye.